Michael Lynch says Barclays sold 1,969 contracts, RBC customers 1,076, and Scotia House account 2,024. And, could it be profit taking from earlier buys? Maybe. But at 100 ounces a piece, when you're talking 2, 3, 5,000, 6,000 contracts, that's an awful lot of gold being dumped. We don't know who and why they would do it specifically, but he is saying it's the banks that are not the U.S. banks. Barclays, RBC, and Scotia are the ones that he points to, and he has all sorts of empirical data.
He has the evidence.
Yeah, you can go and take a look at his Substack. He publishes what he believes is the data and the footprints, the fingerprints to who sold. And I don't think it's just them. But again, it's like pushing a rock down a hill. And once it starts to move, it starts to, like a rolling stone, it starts, or a snowball starts to get bigger and bigger and bigger. It's getting bigger because it's triggering stops along the way. There were a lot of people that sold into this rally who would have probably hoped never, into this drubbing, that probably hoped they never would have had to have those stops triggered. But I think that's what happened in the middle of the night when you saw such a massive drop at a period of time when there was no liquidity, which just dropped the price. And then all of the triggers that would then automatically hit to sell to protect these funds from getting killed would only add to the drop. And then you had the value buyers come in and push it right back up. That's too coordinated to be coincidental, and too stupid to be stupid from a standpoint of where it is ultimately going. I think it's going to continue to go higher. The bull wants to take as few people along for the ride as possible, Michelle, that I do believe. And so, I think that ultimately the markets will have their way. But again, you have a lot of very big players who are on the wrong side of this, massively short. Bob Coleman was talking the other day of the managed money being short 1 billion ounces of silver. In essence. And, that's massive. It's huge. So that means that there are other players on the other side of that would benefit from it. But, when you have that kind of volume on a system that is rehypothecating and trading contracts where, for example, you look at David Jensen, who's going to come on our show, he talks about 140 million ounce float in London that's trading 600 million ounces a day in deliverable contracts, with as much as 2 billion ounces in contracts out there that could stand for delivery with only 140 million ounce float. Now, what could possibly go wrong? What could possibly go wrong? And maybe that's why Eric Young is saying that the LBMA reached out to China and said, we'll take it at these obscene rates. We need it now. We need it. And we'll pay the high lease rates. Because of that, because when you play a game, and look, it's not just silver collapsing. If there was a major delivery failure by one of these banks in London, as an example, all of these banks are not just involved in bullion. They're involved in every single asset that could be traded across the globe. The systemic contagion of this would be catastrophic. It would bring down some of the biggest banks in the world. And this starts to move towards what Tom Luongo talks about, on a coordinated attack against the Bank of England and the European aristocrats. And I don't know that to be true. Tom believes it. But all I can simply tell you is that, to me, the fact that it was done the way that it is done, and then you had someone come in and scoop things up, pushing silver right back up into the positive territory, tells me it was coordinated. It was coordinated by players, perhaps, to drive the paper price down, to accumulate physical at much lower rates, to make good on short contracts that were getting very close to, creating this huge squeeze that everyone has been waiting for forever. Could it be that? Yeah, why not? Sure, there is some legitimacy to profit taking, to look, it's gone up too far too fast, and technicals say you should take profit. Some of that is true, and I believe that to be true. You can see the movement of these assets, these commodities, largely moving to the global south and east, and the exchanges that are popping up in places like Singapore, Shanghai, Dubai, Moscow, St. Petersburg, the BRICS facility that they're building. These will be the price setting mechanisms that will take over for the LBMA and the COMEX. Maybe not the COMEX if President Trump has something in store. Hopefully he does. But I would argue that the Western system of pricing commodities is coming to an end. And certainly those that are rehypothecated the way that they are, you look at those exchanges across the globe, they're largely cash and carry, pay, receive. The ability to, and I'll bring you back to 2020 in the middle of the pandemic, oil went to negative 40 a barrel. Now, how the hell does that happen? How does oil go to negative 40 a barrel? We'll pay you to take the oil. Well, the point of it is that when the futures market is the tail wagging the dog, setting the price for the underlying commodity, you have a problem. It should be the commodity that sets the price for the futures, not the other way around. And I think the world is growing tired of the way that the West has been able to control the commodity complex for all of these years. And that's why I've always talked about the fact that the challengers in the BRICS nations, and you look at who are the ones buying all the gold and silver. Well, it's China, it's India, it's Saudi Arabia, it's Russia, and we know this. We don't know exactly how much they're buying because wasn't it Saudi Arabia and China that both got flagged by the IMF for not reporting what they were bringing in? And we see China buying doré and concentrate, which would not meet the 999 requirement that the IMF would need for reporting. These countries are doing everything they can to play the game along with the West, suppress the paper price, stand for delivery on cheaper stuff. They're playing the same game that we are, only against us. They're coordinated and they're motivated. And that's why there is such a low float in London, which I've been screaming about for years as it's been drawn down against a massive long position, 2 billion ounces, David Jensen, of deliverable contracts against 140 million ounces available. And who knows if that's even right? Or you can look at the guy's name is like Bruce Ikamoto, something to that extent. He's the head of the TOCOM in Japan. 3 million ounces a day London is trading in deliverable platinum contracts. He says there's no physical platinum available in London or Switzerland. None. Yet they're trading 3 million ounces a day of deliverable contracts. At some point, that has to piss off the world, the producers and the people who accumulate it and understand what it means. At some point, it just seems that the West will be challenged for the ability to continue to have their way with pricing commodities when price discovery is cast away through this type of shenanigans. And I think this is what is being used against us because these countries weren't coordinated or motivated and had no really intention of challenging the West. They do now, and they can do it by standing for delivery and using this silly, stupid hubris of controlling paper prices in the middle of the night with paper contracts and not the real thing, and use it against us by standing for delivery and accumulating everything on the cheap. So who knows who was behind it or what the ultimate motivation is, but I'll tell you this, very little of it, I believe, has anything to do with what the talking heads on Bloomberg or CNBC or Reuters will tell you was behind it. That I do believe. I think President Trump has been very confrontational with a lot of our so-called allies, including the European Union. And you could argue that, they're at odds with his tariffs and his policies. And it is a breakdown in confidence of the dollar as being a reliable store of value, of us maintaining the rule of law, where executive orders can be issued without congressional approval. And I think it's true. The trust of the dollar is fading globally. It's hard to ignore that. And then you throw into it sanctions that we have talked about at length against Russia and Iran and other countries. And then, sanctions masquerading as tariffs against countries that are our allies, whether it be the UK or the European Union or Canada or Mexico. And there are consequences for this. So I think it doesn't surprise me to hear this coming from Ms. Lagarde at all. And I think that it would be disingenuous completely and totally to ignore that. And I'm not here to rally against President Trump's way of conducting, his geopolitical affairs, but there's no question that he has certainly, I think, rustled, if you will, some feathers, ruffled some feathers along the way, and I think that's maybe a little bit of honesty that we've known for a very long time, and you wonder how it hasn't been more acknowledged by other countries and other leaders. So I don't find it surprising at all. Debasing the dollar before manufacturing is built doesn't really do anything except help us with the deficit. It hurts the economy, and you have to have the manufacturing here before you debase the dollar. Maybe that's started to get ahead of itself. You look at gold, which, you can go back and look at how many ounces, how many hours a person has to work to buy an ounce of gold, and it's at its highest level ever. It's doubled in the last 18 months, and meaning gold is outpacing everything. It's outpacing the rise in wages. It's moving too fast. It's catching too much attention. And when you hear reports in the mainstream that foreign investors now hold higher amounts of gold than U.S. treasuries, and that it's down to 31% from 49% a decade ago, yeah, I think it certainly maybe is moving a little too far too fast, or at least catching too much attention at an inopportune time for the U.S., who is trying to do something. But ultimately, I think higher gold is what they want, not to make gold higher, but to continue to debase the dollar. I do believe that. Um, I just think that there's a lot of moving parts at hand that could accelerate things too quickly with the fragility of the system, in particular, the fragility of the banking system. And maybe it's just gotten a little ahead of itself in terms of what their plan is.